Welcome to the Tiny Box Dialogues. This series was created to share the knowledge of our experts using real examples from real people with real stories. So welcome to Tiny Box Dialogue special series on Bitcoin part 3. Today is our final part of the special series with Tank. And I'll give a background on you again, Tank, just so that people who are joining us new know. Tank started his journey into this world as a freelance software engineer focused on full stack web development, security, and cryptography. He moved into the world of Bitcoin as a technical lead for the development of a cross-platform Bitcoin and the Lightning Network. In part 1, we discussed the fundamentals of Bitcoin, the history, the technology, and crucially, the philosophy. In part 2, we discussed other cryptocurrencies, altcoins, and why not all crypto is created equal, as well as risks to watch out for. This week, we are answering the questions for you to consider if you are thinking about investing in Bitcoin. Please do use the Q&A if you have any questions as we start to chat. Now, Tank, as you know, I come from banking. And one of the reasons I'm such a huge fan of the last bank I worked for, TD Bank, is that our then CEO, Ed Clark, when asked about the financial crisis, he said, we were asking, what's our exposure to it? Because we had family and friends asking us as Lehman Brothers was going down. And he put out a report to all employees to say, we weren't exposed. We'll only see the downside because of all of financial services will see the downside. And when asked why, he said, my philosophy is if you don't understand it, don't invest in it. And that's exactly the messaging that you're trying to give us. This is exactly what you espouse. And I want to make sure our audience leaves with tangible insights on why their investment decisions should be based around their level of knowledge. I know you feel the same. So let's kick off with, how can you get started with this investing mindset? Like, how would you suggest that people start?
Sure. I mean, also the disclaimer again, like this is not investment advice, right? We're just
sorry,
educating.
I did forget.
No worries.
This is not investment advice. This is purely educational and informational information, which is on the video, but I forget it's not quite on Spotify. I usually add it afterwards, so no worries.
yeah, no worries. I just wanted to make that clear. So I think in terms of at the end of the day, I actually see Bitcoin as savings. You know, I don't see it as investing. I see it, for me, it's a savings technology. Granted, it's a very volatile one, but with volatility, there also comes tremendous opportunity. You have to see this thing like, so technology grows in S-curve adoption, right? There's these adoption S-curves, which if you look at the growth of the internet of mobile phones, they start like very, very slowly, then they grow up and they become exponential, and then they flatten as like the majority of humanity is onboarded onto the internet. Yeah. Same thing with mobile phones. And these curves actually accelerate in their adoption speed when the internet came about. So like Facebook, WhatsApp, all these networks actually accelerated in adoption speed once the internet came there. And the same is with Bitcoin, actually. Bitcoin is the fastest growing adoption S-curve in history. And so what you're seeing in terms of the volatility of the price is basically just a function of the fact that this thing went from zero to now it's around $40,000 with a market cap of somewhere between 1 trillion and $800 billion in 13 years, right? And so that's around like 10% of the market cap of gold, which is around $10 trillion. The investable, the store of value part of the gold, which is actually, not in jewelry or computer electronics, is around, people estimate around 5 trillion. So that's like in bank vaults and in central bank reserves and all that. So it's actually, Bitcoin's quite relevant in that regard. So it's like somewhere between 10 to 20% of the market cap of gold. And we're still only at around 2% of the world population having adopted this, right? And that number is more than doubling every year. So every year, or at a rate of 2x, that number of users is growing. We're around, I think, the number of wallets with on-chain analysis is estimated to be around 200 million users, right? And if that number keeps doubling every year, we're obviously going to get to 1 billion users quite quickly, right? And that's a large part of the human population. Whereas in 10 years, actually, if you extrapolate that, which is always dangerous, right? But like if you just look at, okay, how did the internet get adopted, at what adoption rate, how did, you know, these social networks, like mobile phones, get adopted? This usually happens quite quickly. And so the thesis, or the working hypothesis that I personally have, is we're moving into the digital age, we're becoming mobile, and we will need a internet native currency, which will kind of go along with that. And so this is just an adoption S-curve, and that's how I see it. And that's why it's so volatile. You're basically looking at a startup going from the seed phase, right? And you're seeing, you know, like when you invest into a startup as a VC angel investor, or as an angel investor, as a VC, you're basically, there's no stock price where you can look at, like, you know, Amazon or Apple. But if you could see that, you'd see like very, very volatile, very high growth, very fast growth, or like basically it goes to zero, right? Like those, that's kind of, a lot of startups go to zero, but those that really get traction, they grow very, very quickly. So if you were to look at the kind of the stock price of Amazon before it went IPO, you would probably see something similar to what you see in Bitcoin. It's like a very volatile asset growing very quickly with its network effect, which is obviously scary to a lot of people. But at the same time, I think there's tremendous opportunity there. It's the first time where you can actually kind of own kind of Vijay Boyapati and his bullish pace for Bitcoin. It's a great blog post. I recommend everybody read it. He basically talks about the internet of the history of the internet, like the history of gold, the history of money. And he basically says, buying Bitcoin is like buying a piece of the internet. You're buying it like something, you can buy a share of, you know, the internet as it gets adopted. And that's kind of how I would see it, and in terms of like having a mental framework around the volatility.
That's great. So basically you're telling people, if you understand that this is actually the normal economic process that anything that is so new would go through, and you limit your exposure to it as it's growing, then you can balance out your risk or your fear around that volatility. Is that kind of what you're getting at?
Yes, exactly. So, and this is also a question of like portfolio allocation, right? Depending on how, let's say, your personality, your risk tolerance, your age, you know, that might all reflect your portfolio allocation. At the end of the day, and again, this is not investment advice, but you want to have a diversified portfolio where you have different risks, right, with different asset types. And that's how I would see Bitcoin, as a portfolio diversifier, as an inflation hedge potentially. That's kind of, it's kind of like a risk on inflation hedge, right? Because right now it's still very correlated to the stock market and risk on assets, right? Okay. But as the market cap grows, the hypothesis behind this, it will replace gold as a store of value, because it basically, you know, it's more convenient, it's easier to transfer and store. So if that actually does happen, and it kind of flips gold in market cap, which a lot of people think it will, that's a, you know, that's a, I would say a working hypothesis. And that's something, yeah, which people bet on, and they kind of make a calculated bet in their portfolio, and then, yeah, allocate a part.
So if you haven't started with Bitcoin, I love this analogy that you used of the piggy bank, because I've never heard, like, very few people use that term piggy bank anymore, because it used to literally be a pig that you put your coins in. But I really like this idea for people who have not been exposed to it yet, rather than the ones that are already investing, that, you know, it really is just put a small amount in. As you say, it's a diversified portfolio. Think of it as long-term savings, the same way that you put $50 into your savings account, right? Except this is actually in a digital currency. This is a great analogy that I thought you did really well. So I just wonder, is that like a good stepping stone in while you're building your education? Because we've only covered like really high level at this point in 3-part series, right? Because there's an
Definitely.
emotional aspect to the fear. I guess that's what I'm trying to get to. There's an emotional aspect to the fear, and how do people stave that off?
Definitely. And I think the fear is a function of how broken the monetary system is. The fact that you have to now, as a normal person, you can't save in dollars anymore. You can't save in euros, right? Because your buying power will decrease over time as the currency gets debased with stimulus measures. So it kind of really is very unfortunate for the middle class, as their retirement is denominated in dollars and euros, right? Their buying power will decrease versus the people that have assets and that have the education around portfolio theory, right? Like, you need such a level of education to understand and have a diversified portfolio. You potentially need to understand how stock markets work, the bond market, gold. You need to understand risk parity, which is what Ray Dalio has, talks about. You may be a value investor like Warren Buffett. There's this massive space of financial education that you have to expose yourself to if you just want to save, right? You just want to,
save effectively.
So like in today's monetary system, if you just want to save for the future, for retirement, it's so complicated. Like, you basically need to do this as a part-time job to educate yourself financially next to your normal job, which most people don't, because they have friends, family, and other things, other responsibilities, so they don't have time for this. And this is really how, like, I would say the user experience of money is just broken, right? And this is why I love Bitcoin, because at the end of the day, it fixes the user experience of money. We have a piggy bank again. We can just save, right? With every paycheck, we can just put a little bit in there of our disposable income. And that's awesome. That makes it really accessible. You don't have to, obviously you have to educate yourself on this as well, just like any other thing. But you just have to educate one thing. You don't have to educate, around portfolio theory, which is actually much more complicated.
I think the fear is being decreased with the negative investment rates and to interest rates, because, even now, if you put money into a savings account, you're actually losing money by saving money. So I really think that the fear is getting lessened by the fact that we're in such a volatility in regular banking as well. What I do want to do is take it step by step for people who haven't been exposed to it. And, you've told me a lot about, you open your account here, and then once you reach a certain level, then you got to move it out. So can you go a little bit into the first step? Like, what's a first step that you would suggest to somebody who has never even invested in Bitcoin? Like, what should they start with? Like opening an account on, I guess, Kraken or something? And then what level do they need to think further into nodes? Because we did speak a little bit about nodes last week, but I want to dig a bit deeper into that, so people have real step-by-step advice.
Yeah, honestly, start with education. Like, go download the Bitcoin white paper. It's 8 pages or 9 pages. It's very accessible. Just read it and maybe read The Bullish Case for Bitcoin. It's a great blog post by Vijay Boyapati. Maybe listen to some podcasts, educate yourself, and once you feel comfortable, buy a little bit. I don't know, buy something, buy $100, dip your toe in whatever makes sense for you personally, and just look at the price go up and down a little bit, get a feeling for it, and then
this can also take place within an account, in like a crypto account. Yeah. Okay.
Yeah. So a lot of the big exchanges are like Kraken is a big one, Coinbase is a big one that you can use. Depending on, in Germany, we have the Bison app, which is from Börse Stuttgart, which is the one when my friends ask me which one they should use, I actually recommend this one because the UX is really simple, right? It's kind of like your trading account from your bank.
I'll share all these links with everybody in the future email so the audience doesn't get lost in this. Go on.
I have no interest in what people use. I'm just always an advocate of good user experience and usability, because it makes it accessible for the newcomer. So just use
what you feel comfortable with, or wherever you're located. And
Coinbase is the easiest one, but it's got the most altcoins. It kind of like really markets them in your face, so it's a little bit, it's like, I would say you're signing up for a casino and then like the casino wants to like once because they make a lot of money with you buying and selling these coins, so they kind of want you to gamble.
Yeah.
So it's become a little bit like that, like this altcoin casino. That's why I'm hesitant to recommend Coinbase, but there's ones like, if you're in the US, there's the Cash App, which is Bitcoin only. There's the Strike app is also, which is actually, I think, the most simple one. Then there's all these I think there's thousands of Bitcoin exchange, like worldwide. You can like go on like in Turkey, you can go on the street and actually go to physical stores and buy and sell Tether US stable coins or Bitcoin over the counter, right? And then trading cash. Like, like this is such a, like in every country, there's now thousands of places to buy and sell it. And they actually, the daily volume is higher than Apple stock. Wow. So yeah. So this is now basically a worldwide phenomenon, and so it really,
it's great.
It's up to you.
It's a really great, like I went on to Kraken by your advice, and I've been looking at it and kind of educating myself, but even just looking at the volatility, I mean, you see that S-curve starting to take shape, right? So it's really a great way to educate yourself and just see how it changes, you know, day over day, week over week, month over month, just from that perspective alone. Even if you have nothing invested, just downloading the app, taking a look at it, keeping educated on what's happening in that crypto world can be useful, right? I guess the next question I would have for you, so that's a starting point. Let's say that you do invest more than 5,000 or 10,000 into Bitcoin or any other cryptocurrency, then what do you need to do? Because we talked about nodes last week, but I want to explain why that becomes important when you've suddenly gotten to a point where it's a large amount within one of these crypto exchanges.
Definitely, yeah. Once it's a meaningful amount of your savings, you should for sure take custody of it. Like we talked about this in the first episode, is that this is something where you can actually withdraw it from the bank, from the exchange, and send that Bitcoin to your own physical hardware wallet, right? And you know, the easiest one to use, in my opinion, is Ledger. So there's the Ledger Nano S or the Ledger Nano X, which connects with your phone. There's also, you know, if you're a little bit more technical and you're like the cypherpunk personality, you can use a cold card that's a little bit more nerdy. Then there's also Trezor, which has been around for quite a while. I think they were the first hardware wallet on the market, the Trezor one. And yeah, but there's so many hardware wallets now. There's the Bitbox, which is a Swiss company, which is, I haven't tried it myself, but people say it's the most secure and the most easy to use. And like, especially in the German-speaking market, Bitbox 2 seems to be the wallet of choice for a lot of people. So yeah, like these are just some things. These hardware wallets cost around $50. You know, you set them up. What they do is you basically set them up and you write down a backup seed phrase, which is something you want to store in another geographic location, you know, in case somebody breaks into your house or something like. So that there's all these steps that you have to think about once you take custody of it, which I don't know if we want to go into here. But
wouldn't mind just touching on it, because like it is the same as holding cash. If I put a whole bunch of like thousands of dollars into a container in the kitchen, you know, somebody can come in and steal that. And it, like, just to touch on it, people can do that with these wallets, right? These hardware wallets. So there are risks that are associated. What's the security? How can you protect yourself around that?
Well, so the simplest thing is, you know, there's always redundancy in terms of security. So let's say you have this hardware wallet in your home and your home burns down or just somebody breaks in, right? That's a risk. You want to basically mitigate that by having this paper backup that you potentially, you know, store with another family member. Now, the more redundancy you have of that paper backup, like if you have two backups, like that increases the likelihood of that paper backup being stolen, right? So what you can actually do to mitigate theft is you set a password on that. It's called a passphrase. You set this like another thing that you need to know in order to get to the Bitcoin, right? So and this is where
actually it is more secure than cash then, in that sense, because cash can just take to a shop and use it.
And in this case, like you could actually take a hardware wallet, keep that at home in your drawer or whatever.
Mhm.
Usually most of these hardware wallets are quite secure. Even if you get physical access to them, you can't extract the private key from them. So you can keep that one at home and then maybe have a paper backup in 2 other places, you know, with friends or relatives or at work or whatever, and make sure that have like once you have a really meaningful amount on there, you want to have a passphrase, which actually is an extra layer of protection in case one of those 3 then gets stolen, right?
Yeah.
And that will be like a quite secure setup. Once you get to like really, really high amounts, there's something called multi-signature. So it's just kind of like if you have a bank account with your partner, you both need to make a signature.
Mm-hmm.
So this is actually when you could set this up. There's 2 of 3 or 3 of 5 multi-signature setups where you have then
That's when you're in the millions, right?
Well, it depends, like whatever is a meaningful amount for you.
Mm-hmm.
And depending on how, like but these are still quite difficult to use and quite technical. But like if you get to these really high value amounts, you want to have geographically redundant multi-signature where
Mm-hmm.
you really, you know, you don't want to have a single point of failure, and you want to protect yourself against physical attacks, against
Would you go,
break-ins.
would you go that route rather than having more than one node? Like, let's say that you have homes in 3 different countries, then would you keep, you know, some of your key here, some of your key there, or does that also create less security?
No, that's a great way to do it. You basically create, you spread those keys out. Let's say you have a 2 of 3 multi-signature. So you need 2 hardware wallets, 2 keys to spend to get access to your Bitcoin. Then let's say you have 3 locations. Then you have one in location A, one in location B, and one in location C. And in order to have your long-term savings, you can keep saving into that without needing access to those. But once you actually want to spend them, you need to like go from location A, take the key, go to location B. And so like that's like a one-time thing. Once you've done your transaction and you've kind of got to the Bitcoin, the amount that you need, you put the key from location B back to location A, and then they're geographically distributed again. But this is really like in a very advanced setup. But this is not something I would advise for someone in the beginning. But what I'm trying to say with this, it's actually quite cheap. If you basically spend $50 times 3 for a really high amount to have really high security, versus if you compare this with gold, it's really expensive to secure a high net worth of gold, right? You need vaults, or you potentially need to trust a bank, which has a centralization risk again. You know, in the 1930s, the gold was actually, there was the executive order by President Roosevelt, and the gold from the private citizens was seized. So, and this is that counterparty risk that you have with gold, which you don't have with Bitcoin because it's so much cheaper to store. So, but that's all I'm trying to say. Like once you have a meaningful amount, and this is actually your life savings, which for a lot of Bitcoiners, that this is what they do. They do geographically distributed multi-sig, which is actually quite cheap to then manage.
Yeah. Thank you for that, because I think it is important to show contrast to something like gold and the fact that it's still then exposed to the financial system. And you had said to me at the beginning, like, you know, something like 1% of your total portfolio, and then dollar cost average the rest. So you can just slowly start to tip into it. When we're talking about portfolio allocation, I like that you said to start slow and go with your education. What do you say to family or friends who want to enter this business? Because it is a business in the end. It is like venture capitalism. You're investing in something, right? So how do you allay their fears or barriers around doing that? Is there any specific advice that you give them?
Again, I'm not a financial advisor.
No. Yeah.
I don't want to make any recommendations. It really depends on what your risk tolerance is, how comfortable you are with the asset. Like Ray Dalio, he's been very skeptical of Bitcoin. It really took him many years to get around, because he in his all-weather portfolio, which basically stocks, bonds, gold, and commodities, right? So he weighs different portfolio allocations depending on different types of economic conditions, be it inflationary, deflationary, recession, a growth phase. And he has in his all-weather portfolio, he has around 7.5% gold or something. And he has now come to the point where he says 1 to 2% allocation in a diversified portfolio for Bitcoin is something that he actually thinks makes sense.
Yeah.
And this is someone who's like
he knows his stuff.
I mean, he works at, he founded Bridgewater, which is the biggest hedge fund in the world. So he manages really billions of dollars. And when he says 1 to 2%, that's kind of the scale you have to think about. In terms of like a private person, depending on how old or young you are, like let's assume you have all of your retirement savings in public pensions, or right. A lot of these pension funds are not yet allowed to allocate directly to Bitcoin. So there's actually, it's funny, like there's this podcast called the Blue Collar Bitcoin Podcast, which is a bunch of firefighters in the US, and they actually tried to get their pension fund to allocate to Bitcoin. So, and I think they've succeeded with that. But a lot of pension funds aren't allowed to allocate yet. So yeah.
It's the same as any financial advice that's ever been given in the world. Is diversified portfolio just hedges your bets. And I mean, that's something that I think would be suggested by anybody like Ray Dalio or any investment manager, is that you should never, it's the same as the derivative scandal. If you put all your money into these mortgages and second mortgages and the derivatives, then of course you've exposed yourself to a larger volatility. So I think that's basically the best advice that can be given, is that, you know, you've got to educate yourself. And then once you educate yourself on each component, then that's when you should invest. And then that should depend on your level of education. I like that. I want to just dig in a little bit, because I think there's so much good that's happening around the world. Of course, there are downsides, but I heard recently from Alex Gladstein, he says that Bitcoin strengthens human rights, censorship resistant, seizure resistant, borderless, peer-to-peer, no intermediary financial institutions, like no middleman, basically. Of course, there's a downside to the fact that you don't need a name, address, or other information to be able to make a transaction, but there's a lot of upside. And I want us to focus on the upside for a second. Where have you seen this strengthen and improve the lives of people in the world? I mean, you've sent me a couple of articles, so I'd love to just touch on them while we have a little bit of time.
Definitely. I mean, because it's a neutral money, it's sometimes called the money of enemies, right? You know, like where it's very apolitical. It doesn't matter what like political association or you have, you can just use it. It's permissionless. It's an open network, and that has obviously upsides and downsides, right? Because bad people are going to use this and good people are going to use it. What I would say
any
about
banking system.
Yeah, like what in the media you sometimes hear is being used for drugs or money laundering. Actually, the former CIA director has published an article around this, where and there's also been research around this. Actually, less than 1% or 0.1% of transactions are money laundering. So it's a very, very small amount. And Bitcoin is actually a very bad choice for criminals, because it is in a public blockchain, which you can then track. If you bought those coins at an exchange, there's know your customer regulation. So you need to actually buy those with your identification. And then they're basically by the government trackable back to your person. So this makes it a really poor choice for criminals. Like, and this is why criminals actually use the US dollar and cash, right? This is still the best choice for them. But it's great because it's still permissionless. And in Afghanistan, this is in the one documentary by Alex Gladstein, who works at the Human Rights Foundation. He points out that women in Afghanistan who are basically no longer able to access the financial system because the Taliban, they are using cryptocurrencies to feed their families. So they're actually using Bitcoin and stable coins like Tether and USDC to have access to the financial system and not have to go through banks
to make transactions, because they don't have the ability to make any transaction to feed their family. That's pretty shocking.
Yeah, and another example is Navalny, and I forget how to pronounce his name. Alexei Navalny. He's basically a dissident in Russia, which he's been very skeptical of Putin. He's raised funds over Bitcoin. So there's a lot of political dissidents that use this, and on all sorts of political spectrums. Right now in Canada, we're seeing that the truckers are using it to gather money for their protests, right?
Yeah.
And the Canadian government is now trying to put pressure on financial institutions so that the truckers can't get access to that. What I'm trying to say here is like, it is really an apolitical money, and it's a great tool to basically further whatever your cause is, because it is something that is outside the normal financial system, which has a lot of choke points for potentially authoritarian regimes, right? Because a large part of the human population, I think Alex Gladstein pointed out that over 50% of the human population lives under some form of authoritarianism, right? So us in Western democracies with human rights and access to the legal system, we don't have to worry about this so much. We're very privileged. We can just buy stocks and bonds to protect ourselves from inflation and debasement. But a lot of people aren't really that fortunate, and this is what we need to keep in mind when we talk about this stuff. Is like, we're in a very, very big position of privilege, and we should not basically we should take into consideration that a lot of people aren't, I think.
Yeah, and that this is potentially giving other people freedom. I think that even the most elegant solutions can have unintended consequences. And I think this is just one way of saying that it can be positive unintended consequences. In the case of Bitcoin, I think it's actually intended. The whole idea of making it peer-to-peer and accessible to everybody is part of the philosophy of it. So I think that is a very important thing to point out. As you say, if we're talking about money laundering, it's such a small percentage, even with cash, and Bitcoin is a much more, it's accessible. It's accessible to women who can't get food for their families. I mean, if we're going to go really deep into it, you don't have to be political to believe in it, but you cannot discount the good it's doing. I guess that's the message that we want to send out. Right?
Definitely.
Cool. Go ahead.
Sorry, go ahead.
No.
Well, one thing I would say is, like, I think if you look at the early days of the internet, a lot of the same things that were being said about Bitcoin now in the early days, like around, it's just used for drugs, bad things, for the internet, it was in the beginning, it was like, oh, it's just criminal stuff, porn, it was considered a fringe technology. Paul Krugman, who is actually one of the biggest critics of Bitcoin back when the internet, he said, there's this quote, he said, oh, the internet will be no more relevant than the fax machine, right? So he could not have been more wrong on that.
And now he's a big opponent of
and he's a Nobel Prize winning economist, so obviously he must know, right? So what I'm trying to say is, like, it's in the media sometimes portrayed a little bit as shady or as dangerous or something. But the internet was talked about the same way. And I think this is how usually early technology, it's scary to a lot of people because it changes things, it changes the power dynamics in society. But I think it's inevitable. I do really believe Bitcoin is inevitable. It's just going to be like in 10 to 20 years, everyone's going to use it. Like, it's just going to be the normal thing that we transact in, right?
Yeah, that's great. I mean, we have gone a little bit over time, but I wanted to make sure that core message got across. And again, this is not investment advice. It is educational and informational. And you've given us a lot of information about what is happening with it and what some of the opponents are saying. And that's great. I think that's enough information for people to start their journey into Bitcoin, which was what we intended when we started the series, is give enough information that people can make informed decisions, right? Is there a last message that you want to leave the audience with before I close this off?
Yeah, just
aspirational thoughts.
I don't know, just hodl. Just hodl.
Simple. You always put it succinct. Very nice. So I'm going to close this off. We have discussed why Bitcoin is the most inclusive financial system and why all cryptocurrencies are not created equal. Thank you for sharing how to make informed decisions and cautiously test the market to maximize investing in Bitcoin. As Tang said from the beginning, he encourages us to learn the fundamentals to make informed decisions and maximize our financial freedom. And that's really what Bitcoin is about. It's about creating your own financial freedom. in a different way. So thank you, Tank. And I will share all recommended resources underneath the YouTube, whatever your circumstance, wherever you start, Bitcoin levels the playing field, and I wish you the best of luck with it. This audio will be shared on Spotify. This video will be shared on YouTube, and information where to find Tank and follow him will be also underneath the in the description. So thank you for joining us, and see you next time. Thanks, Tank. Appreciate it.
Thank you. Thanks for having me. Bye.